Good morning and namaskar. Have you heard of the best branded apparel company of India? Its name is Raymond Ltd. The present chairman is Vijayamohan. It was founded by his father. Now it has been there for the last 9 decades and it has been doing reasonably well. In the latest quarter also it has done very well. Earlier it was only a textiles and apparel group, but now it has diversified into FMCG, reality, engineering, prophylactics, and so on and so forth, both in national markets and international markets. It enjoys the patronage of several middle class and upper class customers, billions, so all over the world. So Raymond is reckoned as a world class quality products company. Most consumers, once they get addicted to Raymond, they won't leave it. Their subsequent purchase also usually go there. Now we will look at the consolidated Q4 results. Net sales in Q4 quarter is 1958 crores, whereas in Q3 it was 1843 crores, which means there is quarter on quarter it is 6% up. Now in Q4 last year the sales were 1366 crores, which means the Q4 of this year there is an upward momentum of 43.38%. And there is an exceptional item of 111 crores. Its nature we will discuss later on. 111 crores. Exceptional item minus. Now, profit before tax is 131 crores in Q4 of this year compared to 184 crores in the previous quarter. So, there is a reduction of 29% quarter on quarter. Whereas last year Q4 the revenues for the profit before tax was 65 crores only, which means year on year there is an upward momentum of 101%. Now there is another peculiar item, tax. Tax is normally a plus item, an expense item. Now here in Q4 it is a minus item, 132 crores minus item. Now after that, 131 was the profit before tax, but after tax, net profit is 263 crores because of the negative tax, 132 crores. Now previous quarter 101 crores net profit, which means there is a quarterly growth of 159%. But compared to year on year, there is a improvement of 475%. Q4 of last year was hardly 45.75 crores profit. Now it is 263 crores. Okay. It includes a negative tax item, but still, even without that also, the performance is reasonably good. Now, current market price is around 1181 crores. Price earning is 7.5, somewhere around that. Now, what are the exceptional items? It includes a write-off of trade receivable, considerable sum, 99 crores, that has been written off as non-receivable. It is an apparel business. Now, who accounts for it, that we don't know. That is, of course, up to them. Now, there is also an interest subsidy recoverable on a loan. That also has been written off, 12 crores. In FY22 whole year also there has been exceptional items like that. Now, what are the significant achievements in Q4? Including other income, the highest ever revenue is 2032 crores, up 44% compared to previous year. Highest ever EBITDA, see, highest ever revenue, highest ever EBITDA, highest ever profit before tax, then significant net debt reduction. So many things are there. Profitable top line growth across all businesses. It has got 7 or 8 businesses. Across all those businesses, it has performed well. Top line has grown very well. Balance sheet strengthening continues. Their debt repayment has been going on. Net working capital days has improved to 45 days from 72 days in the previous year. It's a good improvement. Net debt has been reduced by 165 crores. The strongest profitable growth across all businesses. We have said that highest EBITDA despite pandemic in Q1, highest profit after tax in the last 10 years, etc. Now, what are the various branches? Branded textiles, that has improved by 23%. In fact, that is the highest revenue earner, 886 crores. That has improved by 23% compared to last year Q4. Branded textiles is over. Branded apparel improved by some 59%. Garmenting has improved by 69%. High value cotton shirting, that has improved by 31%. Engineering has improved by 8%. Real estate has improved by 495%. Overall, Raymond Ltd consolidated has come to 2032 crores, 44% improvement. Now, what is that engineering business? It is the consolidation of 3 subsidiaries like JK Files and Engineering Limited, JK Talbot Limited, and Ring Plus Aqua Limited. Others include non-scheduled airline operations. It's a peculiar thing. They have got some airlines, small airlines, and they lease it out periodically to other people, whoever wants it for 1 day, 2 days, 3 days, 10 days, like that, for marriage parties, etc., like that, something like that. And then there is other income, unallocated expenses, etc. So this is other income. Last year 52-week low was as low as 360. Now subsequently it has risen to 1278, 79, like that. So it has gone beyond the earlier 52-week high. Volumes are good, 10 million plus, which means you can sell or buy Raymond Ltd shares very easily. Now, what are the strengths of Raymond Ltd? Promoters are increasing their shareholding quarter on quarter. That is, the March quarter they have made further purchases, improved their shareholding. The trailing 12 months EPS growth is quite good, impressive. Strong quarter on quarter EPS growth is there. 52-week high, quite impressive. It has been reached and breached. So revenue highest, operating margin and operating revenue highest, net profit again highest, and EBITDA very good. So all these things are good. Now FIIs and FPIs are increasing their shareholding. That's a very good point. So the momentum, price momentum also is very good. In the last 1 month, more than 20% it has gained. So price momentum is there. But of course, again, it depends on the market conditions. Now these are the strengths. Now let us look at the weaknesses. ROE, return on equity, is declining the last 2 years. Shareholders' funds not properly utilized. High price earning in the last 2 years. Now, because of the higher EPS, the PE comes down. Net cash flow is declining. Now, what are the opportunities that people see in it? Last traded price has gone above the R3, resistance 3, higher, like that. RSI indicates price strength, high recovery from 52-week low. Now, what are the threats? Promoters are increasing their shareholding, that is right, but they are also pledging their stocks in Q4. What purpose, that we will see maybe the next quarter or something like that, but they have pledged a good amount of their stocks. Company has increased their debt. They are repaying debt, okay, but their debt also is increasing. They have to make more payments of the debt. Non-core income, other income, etc. is increasing, that airlines and all those things. Basically, Raymond is a high beta company. What does that mean? It is 1.27 actually. It means it rises more than the index, falls more than the index. So trailing 12 months EPS was 39 and trailing 12 months PE is 32.51. Sector PE is 14. Book value per share is 366. Price to book is 3.48. Face value is 10. Continues to be 10. Market cap is 8,464 crores. So overall, it's a very good company, promises to do well. It has outperformed Nifty. Raymond was up by 50.97%, whereas Nifty came down by 2.58% in the last 1 month. One of the important factors that we have to note in respect of Raymond is the stock saw 105 number of large deals on a single day. Of course, this is on one day which I have noticed, but such large deals seem to be continuing in respect of Raymond. As I said, promoters are pledging something like 27.47% of their shareholding. But they are increasing their shareholding also from 49.04% to 49.16%. Mutual funds, same, no change. Number of schemes, no change. But FIIs and FPIs have increased their holding from 9.58% to 10.21%, and number of institutions increased from 140 to 155. So overall, the sentiment in Raymond is somewhat bullish. So upbeat sentiment continues. So initial weeks of Q4, that is you can say January, etc., were marred by Omicron-led restrictions by the government. But now February, March, it has recovered. March especially showed a very good uptrend. And they are expecting a very strong wedding season. So Q1 also can be very, very good. So now Q1 is going on. Results will be coming maybe next month or next month. Now the other aspect of for most textile companies is the physical offices. People are calling their staff back. Social gatherings are increasing. Wedding seasons are increasing. So there are healthy footfalls, healthy sales in respect of most textile companies, apparel companies, especially Raymond. Exports momentum also continues very well. US, UK and Europe momentum continues very well. So like that, it is continuing. Raymond Ltd is a very good company. Now what I find is that their ambition level must rise higher. I mean, my own feeling is, see, quarter on quarter, sales should be increasing always. Never should the sales fall down. So now, at certain level is their total revenue, some 2000 crores, something like that. Next quarter should be some 2500 crores, at least 20% sales should increase in a good company, in an ambitious company. I wish and I hope Raymond Ltd takes that initiative in its hands and comes up with wonderful sales improvements and profit improvements. Thank you all for listening. It's not my recommendation of Raymond. For that, you have to make your own assessment also, but I have given you most of the important points. Thank you, friends. I will be back with you with another very, very good company. Thank you.